I've seen one day, in XYZ office, an astrologer coming in, and then soon after I've seen few desks in commodity and in trading. They are taking some calls and then say my day is over now. I said, your day is over? You've just started. So I said, today's call is over. I've got, where did you get it from? I said, that person who's come from, come into saffron robes. I mean, I have nothing against astrology, but unfortunately, it's not something which prescribed by CFA curriculum as one of the valuation methodology. Do you know how much the population participating in capital markets in India? Any guesses?
I don't know, maybe under 10%?
It is just 3% according to a 2020 report I saw, and in US is 55%. So now there is a very solid line between price and value.
So today we have with us Mr. Prateek Mohan, Head of Corporate Finance and Strategy, as well as Private Equity at BCG. For all those people out there who are interested in understanding investment, whether as a career option or just as a side income source, and how business valuation is important to make these important decisions. So Prateek will drive us through number one, his career journey on how he found out he was good at. Then second, he's going to explain us why business valuations are important for investment decisions and where all this research can be used. And number three, and the last one, is he will give us some practical knowledge on personal investment. So thanks for coming here, Prateek. We hope we could take a lot from you.
Thank you for inviting me. Happy to be here.
Prateek, most of us here are in our 20s looking for some guidance to understand what we want in our career. So can you guide us to your story on how you came across business valuation? Sadly, it is not something that we are taught in school. So can you just explain us how it happened and what it exactly is?
For me, it was quite intuitive and quick, but that was not my first calling. Then I went to my mentor at that point in time when I was just finished my BCom, and when I asked him what are the other career options. So he just took a piece of paper and he started writing. Right? He wrote five, I think, courses. First was CFA, second was CA, third was MBA, and then CWA and CS, of course. But CFA is something which caught my attention because I didn't know anything about it. Along with CFA and internships, I was very clear in my mind that my calling is equities. That's the part which I would say uh, goes into business valuation later on. For me also, there were around four events which sort of compelled me to go into this practice. Uh, First one when happens, I call it outsourcing valuation. So when I was started working and I was working with the seniors, I the whole modeling stuff, writing the reports. But when it comes to the meatier part of valuation, right? Somehow I was a bit distant. They distant me, and they do it on their own on a couple of projects. I was always inquisitive. Why is that so? Right? I just want to do it. That's the only part, and that's a very heavy part, right? I came to know how these people were valuing. They were looking at other brokerage houses and taking a gut call, right? And that was something, an eye opener. That's the first thing, right? Which compelled me to look into it. Whether what's the essence of it? Why not senior people are still taking a call? And this was reflective in their hesitance of taking investment calls later on, because obviously if it's not yours, you can't trust it. The second, the event was the bizarre methods of investing. I'm not sure you're going to laugh at it. I've seen one day, in XYZ office, an astrologer coming in, and I asked just one of the colleagues. I mean, there might be some cultural or some ritual stuff, and then soon after that, seen few desks in commodity and in trading. They are taking some calls and then say my day is over now. I said, your day is over? You've just started. So I said, today's call is over. I've got, where did you get it from? I said, that person who's come from come into saffron robes. I mean, So that was second thing. I mean, I have nothing against astrology, but unfortunately, it's not something which prescribed by CFA curriculum as one of the valuation methodologies. So again, that's the second event. The third event to which I call is a false confidence of industry veterans. You might have seen people speaking on television, right? ET Now and
Mm.
CNN in terms of giving the calls. People with around 25, 30 years of experience coming in and speaking. Uh, s- I think many incidents took place, and one of them was when I have seen somebody known speaking on television and later on I saw that person very agitated, obviously off camera. So I
Mm.
wanted to know the reason. The reason was the ET Now analyst asked a question which was not prepared before by that person. So that kind of some sort of a shallowness provoked me in terms of in what field I am. Do I have to be like this? I never want to do, or do I want to change my field? And then the fourth one is I would say is the Professor Aswath Damodharan, right, who is a god of valuation, teaches valuation for now, I think 35, 30 years in NYU Stern. I know I see him speaking on television and on his in his courses very fluently, very honestly about the subject. How he brings in a lot of uncertainty into numbers very smoothly. I think these are the four things which compelled me. And then, I started following him, reading his books, and I think that's where the journey began.
I want to know how you got into BCG during your COVID times and what was your role exactly?
BCG happened in 2019, I think just before COVID, right? I was into valuations prior BCG, and just looking for a change, I would say, and got approached that there is something coming up in Bangalore into research. Now, this is much more than valuation because corporate finance. I manage two teams out here into research. One is corporate finance, the other is private equity, as you said. Uh, so it's a much wider gambit than valuation.
Mm.
Anything could come under the sun, if you like to say. So I think I just wanted to try my hands. I think established one team. I established one team. I rebuilt. I
Mm.
help consulting clients to find solutions on their asks, right, on their projects. Uh, Now mentoring and guiding team members to help them grow both professionally and personally. And last but not the least, building business and creating opportunities for my team members to go all in intricate or maybe some complex projects.
If you had to explain this in the most basic form possible,
Mhm.
what is the problem and what does a business valuation solve? And
Okay.
who does it solve these issues for?
Before us, answering that questions, I would just step back
Hmm.
and I'll tell you that this is not the only way of investing. I don't want to sound sort of what my calling is. That's everybody else's calling. So
Hmm.
first and foremost, true payoff of valuation is into investing. Right? That's the true payoff. When rubber meets the road, you can take calls on whatever that you have done and you are confident and then you invest. Now, what are the different ways of investing, if you say, or different set of investors, if you broadly uh, want to chalk out? There would be intrinsic investors. Now, these are people who invest in companies by doing a lot more due diligence. They know
Hmm.
everything about the company, look at the financial performance, strategic positioning, and the strength of the management. That is one set. And these do mind that these takes long-term positions, right? Maybe year, 2 year, 3 year. So time horizon, it's not a problem. These are very patient people. The second set of investors would be traders. Now, obviously, it's they bet on short-term movements. They act on news. They could be information traders, right? They could be technical chartists, who
Hmm.
can look at the technical maps and invest. And maybe the third, which are sort of a passive investors, which invest in mutual funds, or they want to build a portfolio out of matching the composition of say S&P 500 or BSE Sensex. So these are broadly the three set of categories you will
Okay.
find. So now where I lie into this gamut is the intrinsic investors. That's what I wanted to let you know before, letting you know about what valuation is. Now, valuation helps if your long-term horizon, if you have a long-term horizon, you are patient, and obviously you're good at uh, the with the tools and tricks of accounting, basic accounting and
Hmm.
analysis. I think these are few of the traits.
Are there sites out there, sources, like how do you source information?
So, see, for me, I'm a bit old school. Right now, what we are dealing with is a lot of information outbreak. What happened earlier, 20 years ago, if you think, was hardly
Yeah.
anything, right?
Yeah.
You just get the annual reports of the company and a few articles, and then you get started from there. Still, for me, I think that's the basic source of information, right? There are a lot more sites, there are a lot more things which come up with their own ideas. The issue is you need to take things at face value if you don't know. And as I told you that there were many types of investors, from whom it is written, by whom it is written, it becomes questionable.
What is the career trajectory or the growth that they should expect? That okay, I know like you are also in a very broad category right now.
Hmm, hmm,
So a person who's just starting and is enjoying
hmm.
maybe these intrinsic fundamentals that you guys do and is looking at long term, as you said.
Okay,
So can you just guide a very newcomer like that, that okay, this is how a career in business valuation will start and then grow?
I'll come with the bad part first. A
Sure.
bad part is you won't find investment valuations done much in India.
Hmm.
No,
Okay.
nobody wants to take that part. Very few people look into it. There are very few, and you might not even find them very easily, right?
Hmm.
Just because that's the nature of the game is like that in investments. People are most people are impatient with their money. They give it to you. They want the return. Nobody wants to wait 2 years, 3 years down the line. If
Hmm.
until unless you are a fund or something. So that's once the bad part of it. Hence, I do it on my own, and I get the kick when I do it. I like do this practice because maybe overseas in Europe and US you might find such
Hmm.
opportunities, but that opportunities, especially for investment valuation, you won't find. Now, what are the other opportunities in valuation? That's the good part which comes. It's mostly your big fours, and there are
Hmm.
other boutique firms which have this valuation division with them. uh, this is more sort of compliance oriented valuations. All these options which companies give, ESOPs. So if you need to issue an option, they should be at a fair price, right?
Hmm.
It should not be lower than the fair price. So hence evaluation by compliance needs to be conducted. So these are all sorts of valuations which are existent on all these big four firms. A
Hmm.
person can start from analyst role,
Okay.
obviously analyst, and there could be different hierarchy. So I think it's better to think that 3 to 5 years of a person has to work on these projects into detail, try to understand different sort of methodologies and different sort of projects. Like there are portfolio valuations, multiple, but this is very different from investment valuations for what I have spoken thus far.
Hmm.
And after that, one gets into a bit of a technical and a managerial role. So a project management also comes into bit place once you become a bit senior. So you can look at it as an assistant managers or maybe a managers. That's again uh, 5 to 10 years of your career after that. So
Hmm.
basically, initially 3 to 5 years, and then 5 to 10. You can look yourself somewhere going into managing a team. After that, you might get a region, right, to manage. That's how it happens, right? And a lot more business development things hit you, right?
Hmm.
You need to develop business, develop teams, maybe new region. You develop
Hmm.
strategy, people strategy. I think that's when it goes from your 10 to 15 years, and then maybe it depends. Then that 10 to 15 stretches to 10 to 20,
Hmm.
or you find an opportunity there to grow as maybe a head of certain region. So this is what a career trajectory looks like, but it's quite technical.
As a Gen Z, I'm very curious about investments, and we have been given platforms like Zerodha, who has made this execution of investment very easy. Because before that, I remember my parents getting a demat account from their bank, getting charged for it, then making something. And like when we are very young, even a 2% charge on our whatever 1,000 rupees we are investing is a lot. So Zerodha has made that very easy. And that's why many people are getting into it. But one thing is there, this is for me at least, and many people out there, it's like, as you said, a passive income. It's not something that I'm looking for full time looking into this. So, what I wanted to understand money. So, the whole situation is money is coming through my salaries,
Mhm,
and this income from investment is side income. So, is
mhm,
this whole going in depth into research, understanding the fundamentals of a company,
mhm,
evaluating it, is
mhm.
something that a common man should look into?
Again, I will touch into few nitty-gritties and try to give you one or two things which you can look at least.
Hmm.
But I think before that, you've touched a very good subject about Zerodha. And do you know how much the population participating in capital markets in India? Any guesses?
I don't
Why?
know, maybe under 10%.
It is just 3% according to a 2020 report I saw, and
Hmm.
in US is 55%. There's a Sir Oscar Wilde's phrase comes to my mind. There's a quote. He says, "A cynic is a person who knows the price of everything but value of nothing." Right.
Hmm.
So now
Hmm.
there is a very solid line between price and value. Right.
Hmm.
Whatever you find, sometimes you visit somewhere and say in a hotel or somewhere, you eat something and then you pay and then it's not worth it. The value that you have thinking in your mind you didn't get, but the price is higher that you have paid. That's
Hmm.
all about valuation, right? That's the
Hmm.
gap you want to identify. And hence a lot more people ask questions about, right, what happened to the Coca-Cola price when that Ronaldo incident happened. He
Hmm.
just put in one bottle of water, and
Water, yeah.
however that was not the reason. I mean, the prices tanked 3 minutes before that.
Hmm.
But yeah, I mean, if you go into detail, I mean, it
Hmm.
happened, I don't know the date, but it happened around 9:40 a.m. The prices tanked. He did that maneuver in 9:43 a.m. But having said that, can this happen? This can happen. But what is moving at that point in time is price, which could be temporary.
Hmm.
Value can't change so abruptly,
Right.
right? So hence valuation helps you, what I'm saying, or me, you as a person, to get an anchor so
Hmm.
that you wouldn't be driven by a herding behavior, right? Everybody is selling, you're going to sell. Everybody is buying, you're going to buy, right? Why everybody is buying, you don't know. So this anchor, once it gives me, then it there would be turbulent times when it comes, right? Price tanks, things will happen, but it'll give you some sort of a faith in
Hmm.
holding up that stock in your portfolio because you are, this correct. Now you might die knowing that you are correct, and markets do not correct their mistake. That's a different story and ball game altogether. But
Hmm.
mostly, if a person has this kind of a trait, this valuation sort of come into the picture for individuals
Hmm.
parking their money. I would again revert to the point of understanding the investment philosophy, who you are.
Hmm.
You can start with uh, a couple of reads if you have time. I think a lot more platforms like Zerodha and all, they are providing some sort of a knowledge.
Yeah.
But there also you will see this knowledge is being broken into different chapters for different
Hmm.
people. There would be technical, there would be charting, there would
Hmm.
be different
Yeah.
option strategies. You need to find your game, and your investment. I would say strategy then would depend upon that your ability to take risk, right?
Hmm.
And your investment time horizon. I think if primarily these two are main for a person to reflect, then there's our tools to invest. Once you find that, look at it. What do you want to do? I mean, there would be like I told you, intrinsic valuations. I have
Hmm.
a small read of some of the subject and see that whether you are understanding it's for you. Later on, once you start doing those things, you will develop a point of view. So your
Hmm.
return on capital must always be greater than your cost of capital for your company to be
Yeah.
valuable, to create value. It's most
Hmm.
fundamental thing. Higher margins and higher growth for a company is always good. If the company is able to maintain, that will translate into value,
Hmm.
right? Profit margins. Then your management assessment is also very important, right? Read there's a I think, page as management discussion and analysis into every annual report, wherein management talks about what happened this year and the outlook or
Okay.
for the next year, few years. What's the strategy? What's you're going to do? Read that page for say 2, 3 annual reports. See what they say. Do they do next year? Very easy, right? To understand whether that management comes holds what the promises, what they are saying earlier in the annual reports, and you will see a pattern emerging. If these are some of the basics, when one could starts questioning things around you, starts thinking around that, and then uh, a bit of reading is required, Nandini, right? If you want to
Mm-hmm.
invest and park your money. If you feel uncomfortable doing it after a certain point in time, maybe a year, 2 years, then the best idea is to invest into mutual funds. Or it's not a bad thing. It's not a bad thing. See, if I say what was in 90s, what was Sensex was all around, it was hovering around 4,000 or something.
Mm-hmm.
Now it is 60,000. 60,000. Think you don't have to apply any strategy in India right now. It's a growing market. I think 10 to 15 years or maybe more, there will be growth. Most, even Tom, Dick, and Harry companies will find growth just because your market is growing. It's
Right.
difficult for a developed economy to separate fish from fowl. Here, there are two components of growth. One is the company is doing very good, and the other is whole market is growing. Right? I don't do trading, but
Right.
I have respect for the people who can time the market and make money of it.
On that note, I have taken a lot from here. I hope whoever will watch this later will take, and we can help them as well as much as possible. And thank you so much, Prateek, for joining for this session.
Thank you so much. It's a pleasure.
Thank you. Thank you so much.